Well, Gary Booysen from Rand Swiss joins us now in studio. Gary, thanks very much indeed for coming in. So we've got a few results to go through here. I mean, it's been a heavy day on the results front. Sibanye-Stillwater almost 4% in the red today. A full-year attributable loss of 2.5 billion rand. That AMCU strike, was that a heavy weight on what's been happening at Sibanye, or was there more to this?
No, I think a lot of it had to do with the AMCU strike, loss of production. We've seen rising costs at two of their local mines, which is Beatrix and Driefontein. So seeing those costs pushing up, the lost ounces obviously affecting Sibanye-Stillwater to a certain degree. But at the same time, largely this company has actually bailed out. So they were narrowing their loss, and they've been bailed out essentially by the rising PGM basket price, so the platinum group metals. Platinum obviously still under a lot of pressure. Their gold mining division really suffering. But the likes of palladium and rhodium, which also fall in that basket, having enormous price runs, which helped to actually support the results. So certainly I think it was partly strike action, partly market conditions as well, partly safety stoppages also contributed.
What's the CEO been saying about this?
It's interesting. I spoke to Neil Froneman this morning, and it was, again, most of the questions, very much relate to the ongoing strike action. We've got news now that obviously the secondary strike has been approved at Lonmin as well. Sibanye is in the process of taking over Lonmin and looking to buy the entire listed, at least issued share capital. But if you have a look at it, again, we talked mainly around the strike, and certainly, from Sibanye's point of view, this is very much a political move from AMCU, especially Joseph Mthunjwa. So they're saying that this is not necessarily in the best interests of the workers. They expect the strike at Lonmin could potentially be declared unprotected as well. We also talked briefly just about the debt around the company. So originally Sibanye took an enormous, leveraged up a lot to buy out the platinum mine overseas, and it's really, it's starting to move towards some of the debt covenants, especially regarding the debt to EBITDA ratios, and they have got a little bit of an extension from creditors, but certainly I think that may be a little bit concerning for the company, just requiring higher PGM and higher metal prices to help pay down that debt as quickly as possible.
The other issue I want to bring up now, Woolworths losing almost 3% on the day. Headline earnings per share 2.9% down in its 26-week results. I mean, so the food business, remarkable showing. It continues to do well. Fashion and beauty section, the CEO as well saying, look, there were some mistakes being done there. And then, of course, the very sad story in Australia with David Jones. Just paint the picture as to what's going on with the company at the moment. Yes,
again, Woolies is a story of the food and the apparel, absolutely. And now you can almost split out offshore separately with the David Jones and Country Road acquisitions. But the food wasn't bad. It wasn't great. But it was certainly better, I think, than the apparel segment. And apparel is compared to food is a lot more hit and miss. So as you said, Ian Moore coming out and saying that they really missed maybe fashion a little bit edgy, not targeting the right type of consumer, not really speaking to the Woolies consumer, the traditional Woolies consumer, and that affecting earnings. But the apparel has been under pressure for a while now, and while we think apparel is we miss a fashion line, we perhaps don't have the right size mix. This is very much a science when it comes to retailing, and it just doesn't seem like Woolies has it quite right. They've obviously also been hit with they've had some board resignations which wouldn't fall under his remit. But if you have a look at obviously the resignation of the David Jones CEO David Thomas as well, this is coming on the back of John Dixon resigning, fairly recently as well. So a lot of trouble in that Australian acquisition, and we know Ian Moore is now going to take a far more active role in Australia, and I think he's going to be spending a lot of time, as he puts it, putting his arms around a business that is a little bit difficult.
And I want to come in there because David Jones continues to be a problem for Woolworths. We had a chance to speak to David Moore and Ian Moore rather, and this is what he had to say around that David Jones issue.
We overpaid for it. We bought it at the top of the market. We had 2 great years from it, and we had double-digit sales growth, double-digit profit growth. But we've had 2 really bad years. We've really tried to change the business. We've changed all of our systems, our processes. We've moved our head office. We've launched a food business. We've restarted the refurbishment of our biggest store. It's been a really, really tough time. So has it been a bad purchase? I guess in that we paid too much and it resulted in an impairment last year. Then yes, you would have to admit we paid too much for it.
All right, CEO from Woolworths there, Ian Moore, on that David Jones story in Australia. All right, so Discovery adding 0.5%, and that's despite reporting a 14% decline in net profits for that same period. You don't normally see this with shares, do you?
It depends on the guidance, of course. So I think Discovery, is a surprising, not too surprising, obviously, to the market, but certainly surprising if you look at their history. Coming out with a little bit of a dip in earnings, and now that on the back of just very aggressive capital expenditure. So they've obviously got a very new fancy building in Sandton, which I think Adrian Gore's been answering questions about all day and assuring us that while he's renting at the moment from the building at the moment, it does actually work out per square meter cheaper than if they had bought it. But also obviously investing a lot in the new Discovery Bank, which is being rolled out in various stages, and just explaining the enormity of that project. And they're going to be migrating 300,000 credit cards from their JV with the FNB into the bank, and that's seeming to progress fairly well. Also a very, very strong performance from their Chinese operation via Ping An, and that I think helping to encourage shareholders. The one miss that I think needs to be talked about in the results certainly is on Discovery Life. So they're saying that it's kind of statistical volatility, and it's to be expected. They've had some very high net worth people pass away, and obviously that has impacted earnings this quarter. They said it's about a 1 in 20 event, and they have changed the way that they reinsure now as well to try and subdue that volatility going forward. But certainly you've got to worry that perhaps the actuarial models were not quite what they perhaps could have been.
Yeah, and I really would like to see that particular part in the next results release, and maybe that would be a more accurate assessment. Well, thanks very much indeed, Gary. That was Gary Booysen of Rand Swiss there talking to us, giving us some market commentary.